Step 5. Common mistakes. Here are some of the common mistakes people make while taking financial decisions. Number 1. Term planning. It is commonly said you save in the future when you start planning for it in the present. Many people fail to plan for medium or long term and end up paying more for the things than they are actually worth for. For example, if you have to buy a new car, then start saving for it rather than buying it on loan because you will have to pay interest on the loan. Let's say you want to buy a car worth $10,000. If you buy the car on loan, you end up paying roughly 10% for it, which makes it worth $11,000. So you end up paying $1,000 more for the same thing if you didn't plan on buying it beforehand. If you plan buying things you need in medium or long term, you will save yourself a lot of money. Number 2. Lack of knowledge or experience. Many people invest in things they do not have proper knowledge about, or they depend too much on other people's knowledge. For example, people invest in stock market relying on the knowledge of broker or their friend and end up losing all their money. Remember, a broker will always get his commission either you win or lose. We live in information age and so we have access to hundreds of times more information and knowledge than what our ancestors had, and that knowledge is available to us at a very low price. Number 3. Useless expenses. You should never buy things that you need just once or twice, or the things that you will never use after some time you buy. For example, buying a treadmill which will barely be used or never be used after the first few weeks, and not to forget the maintenance it needs. It will be much more smart if you take a gym membership. You should also cut down the amount of money you spend on harmful things like smoking and alcohol. By spending on a pack of cigarettes, you are giving away your money and buying a slow poison for yourselves. Not only will it drain your health, but also it will cost you a lot of money in the form of your hospital bills later on. That is why it is said health is wealth. Number 4. Lack of comparison. Never ever buy products without comparing it with others of the same category. You can also find a great deal in products of other brands. Just never be afraid to try new things. Also, be sure to check the product that are about to be launched in the recent future. To make the comparison easy, nowadays there are many websites and apps available for comparison of various products. These websites and apps offer you detailed comparison between the products you choose to compare and also suggest you popular and best selling products in the same category. Number 5. Seeking advice. No matter how smart or intelligent of a person you think you are, remember there is someone better than you with more knowledge in a specific field. So, always before taking big decisions, you should seek out advice from the experts. Relying solely on their advice is not good either because it is not necessary that the things that worked out for them will also work out for you. Here is a bonus step for you: taxation. A compulsory contribution to state revenue levied by the government on workers' income and business profit or added to the cost of some goods, services, and transactions is called tax. An average person pays a large part of his income in taxes. Remember when you received your first paycheck after you worked hard for it all the month, just for you to realize that the amount in the paycheck was a lot lower than you imagined because a large part of your income was already gone in the form of taxes. So, we should try to save at least some part of that income that goes to the tax for ourselves legally. For example, if you invest in stock market and you gain profit on some shares and you want to sell it and you are going in loss in some other shares, then I advise you to sell both of them in the same year. Let's say you gained a profit of $1,000 in one share and you are in $200 loss on the other one. If you sell both the shares in the same year, then you will be paying tax on your actual profit, that is $800, instead of paying tax on $1,000. The taxes and their rules vary from place to place. This rule might not be applicable in the place you live, but I am certain that there are some ways through which you can lower the amount of taxes you pay to the government. So, I advise you to talk to your local tax expert and find the loopholes in the tax policy of your area, and you will be astonished at the amount of money you save from these methods.